This new bill is very exciting. We want to talk about some different areas. Above the line, below the line. What that means is above the line means above your adjusted gross income. Below the line means below your adjusted gross income. First one is the SALT cap increase. There was at 10,000, now it's at 40,000. The earned income tax credit is expanded for additional credits.
Tim Fargo. He's a client CFO here at Rose, as well as our tax partner and CPA over at Rose. He's been here at Rose since 2006 and became partner in 2007. Tim Fargo has over 30 years of experience in accounting and business management, including 10 years of being a CFO in the nonprofit sector. Tim has helped our clients here at Rose navigate complex financial landscapes, tax planning, and providing that financial clarity our business owners need to achieve more.
Let's talk a little bit about individual tax changes.
Again, what are the top changes related to individual taxes that business owners should be aware of?
First one is the SALT cap increase. There was at 10,000, now it's at 40,000. The earned income tax credit is expanded for additional credits. QBI deduction increased to 23%, which we talked about above. We'll talk about in detail. And then planning opportunities for higher tax states and setting those up. So first on the SALT tax deduction, really this is important to really work with your tax preparer as a business owner and you have a pass-through entity to make sure that you're best maximizing your state tax deductions. Based on TCJA, when they capped out the SALT tax deduction at 10,000, many states then incorporated the pass-through entity tax that let the business then pay the tax on behalf of the owner so they wouldn't lose those high income tax state deductions for itemized. Well, even that, owners who had state tax payments through other areas or even married filed jointly were still not able to itemize because they were capped out at 10,000. Well, it's important to know that now with the $40,000 cap, you then might be able to go in and itemize your deductions and get a better benefit by combining the pass-through entity tax along with maximizing on your state tax deduction on your itemized. So this is going to be important to really start to plan this out and then look at, based on your income, what's my max and what's the best way I can adjust it.
What's the best way a business owner can maximize their state tax deductions then?
Yeah, so the best way they can do it is to really look at the states that they're in, look at the states that they're filing in, and then first work with their tax accountant to make sure that those states do qualify for the pass-through entity tax. If you're not already making those payments, then make those payments between now and the end of the year. Payments have to be made by the end of the year, and they have to be made through the business, and then plan that out so that then it will reduce your federal income. All the pass-through entity tax doing is reducing your federal income and taking that as a deduction on the federal side. It's not changing your state taxes at all. Another area that did become permanent with the TCJA, the multi-level tax brackets were sunsetting as of the end of the year, effective in 26. This makes them permanent. It makes the 10% to 37% permanent, and then it's indexing the amounts for inflation. This is the 2025 brackets, but we do have the same brackets we had before, but now they're becoming permanent. A couple other individual areas that look at the new law allowed a 529 Trump account, which then allows individuals to create this preferred child use plan. And then there's a credit available once you fund it. It's for new children and setting it up for new children. This is effective for 1/1/2025. A big one you've heard in the news on the next slide is the auto loan interest deduction. This is important individually because if you're buying a new vehicle, you want to, and most of the manufacturers are going to identify this. If it's domestically manufactured, then up to $10,000 is deductible on the interest, on the auto loan interest. Now there is a phase out based on your income, but it is a brand new benefit, and hopefully that will spur auto purchases for domestically created vehicles. Another area that is important, and this may be for business owners, but it may be for individuals who are related to the business owner who may be not the business owner but not able to itemize and they're just on the standard deduction. They did create a new non-itemized charitable contribution where you can, if you're single, make up to $1,000, or if you're married, probably only up to $2,000. And this is a permanent deduction where you can then make charitable contributions, and now you get the benefit of those charitable contributions if you're not itemizing. we've heard a lot about this, the tips on overtime, and they're exempt. So what this is, you're still having for overtime and for tips. The new law is you get up to $25,000 tax-free. It's actually you get a deduction of the tips on your filing return. So you still would get those tips. You would then just not withhold tax on those tips because you're getting deduction for those tips. And the same with the overtime as well. 529 plan expansion. This is one for those individuals who have children. They have expanded what's included in the 529 and what can be paid for. So it's important to look through that and identify if you do have any of the areas where certain credentialing or schooling you could be able to pull out of your 529 plan and cover those costs versus not getting any type of benefit from those. So I did mention a few things about above the line, below the line. What that means is above the line means above your adjusted gross income. Below the line means below your adjusted gross income. Here's just a couple areas that we just talked about that are above the line. So the charitable contribution, now your educator expenses, the 529 uses and plans are now, there's different pieces, and then the increase on your itemized deduction and your miscellaneous deductions are still disallowed. A few other areas just to be cognizant of, and this is important for business owners and for record keeping. So the IRS is doing some modernization. The bill they do have some mandatory e-filing if you're doing more than 10 plus returns. There is going to be a small business dashboard that the IRS is rolling out. They're going to track refunds and notices and audit activity on that dashboard. They're going to focus on some digital friendly tools. So you'll see some more activity within the IRS. And then they have allotted $3 billion for tech upgrades at the IRS. One area that business owners who usually don't really focus on but have to do is 1099 and 1099 NEC and miscellaneous filings. Well, effective the payments after December 31, 2025, the threshold is going up to $2,000. So that means that keeping track and going back, a lot of times that $600 limit, you'd have to then issue them a 1099s or 1099 NEC or miscellaneous. Now it's going up to $2,000. So that will help in terms of some of the tracking and requirements that are needed for that. In addition, the 1099K, which are the credit cards and the payment mechanisms, that's reverting to $20,000 and 200 transactions. It had been on and off, talked about $600, and they've been delaying it. Well, it's going back to the original $20,000 limit. And then again, the 1099s are going to $2,000, and then it's going to be indexed each year. So it's going to be important to know that. It'll help a lot of those small payments that were $600-700 that you needed to gather all the information for.